So this is great. I'm really happy to be doing this with the three of you. I'm sorry you're so far away.
It's okay to move me here.
I don't know if it's an antisocial thing or it's, but we're talking how finance is being disrupted in developed markets. But what's going on in emerging markets is, to me, in some ways, more amazing because you're dealing with people in many cases who don't have bank accounts, don't have credit cards, you don't have credit bureaus, and all people really have is their smartphone, and you guys are remaking the way that system works. And Ruben, I'd like to start with you because I think most people know Grab as essentially the Uber of Southeast Asia, but you're doing finance. Explain how you got from transportation to finance.
Sure, happy to do that, and thanks a lot for having me here, Alan. So we started 7 years ago in ride-hailing, and Alan's right, everybody kept calling us the Uber of Southeast Asia. We got tired of it. We acquired Uber's business last year, and since then we've expanded and added a bunch of new services on our platform. We're doing food delivery, parcel delivery, video streaming, and over the course of the last 7 years, we realized something, that most of our passengers were paying for their rides using cash. And we asked ourselves why. And as we dug further, we realized that 70% of people in Southeast Asia didn't have bank accounts or they were underserved. 95% of people don't have credit cards. When most Uber customers would come, and as they open an account, they would add a credit card. But on Grab, they would pay with cash. And so we realized that there was a huge underserved problem to be addressed in Southeast Asia. And at the heart of a Grab, we've always been wanting to use technology to transform Southeast Asia. We saw a huge opportunity to use our technology to bring all these people, 400 million consumers in Southeast Asia, into the financial system. And that, for me, is super exciting. Imagine the whole population of the US and an opportunity to bring them into the financial system.
But explain how it works, because your drivers they're like bank tellers, right? I mean,
That's
so
right.
Explain how the system works.
Yes, exactly. So in order for us to bring these consumers into the banking system, we had to figure a way for them to cash in, cash out, because they didn't have regular bank accounts. And so what we did was to use our network of 2 million drivers and agents to allow consumers to use them to just cash in. And once the money's in the wallet, they can transact online and offline and use our services.
So you have essentially become their bank account.
We have essentially became a transacting account for them to buy goods and services. On top of that, we've also expanded into lending, where we started off with our drivers first, giving them micro loans to upgrade their phones or to do car maintenance. We also serve our micro merchants, like the F&B merchants, and giving them opportunity to have loans to expand and.
So how many financial accounts do you have?
We've got a number, almost 10 million.
What bank compares?
So actually, the comparison is not against banks. For us,
Are you saying that for regulatory reasons or for?
But to be honest, these are not bank accounts. I think just for the record, these are transacting accounts.
Like bank accounts. But go ahead. Let me go to Shivani, because you started in Africa, but similar experience. You're dealing with people who don't have credit scores, they don't have bank accounts. You figured out a way to provide them credit. Talk about that.
Yeah, it's actually kind of interesting because I think we started at a separate part of, I would say, the ecosystem. We think of it as really very much like what the problems Grab was facing is that the consumer doesn't have liquidity or access to capital to actually even transact with services like ride sharing, food, anything like that. And so we really said what customers really want is actually liquidity. So let's actually start by solving that desire or that want first. To actually be able to solve that, though, not only do customers not have traditional accounts, in addition to that, they're hard to reach. So again, solving for the payment system and the Rails aspect, we actually had to develop integrations with everything from retail chains to Padala centers, so things like OXXO, 7-Elevens, traditional bank accounts, mobile wallets. And so in some ways, our account actually became the most flexible way to cash in and cash out. that a customer actually has choice now.
Well, now you guys are in at least one market together, right? In the Philippines.
Right.
Do you compete against each other?
I mean, we'll see.
You aspire to compete against each other.
Actually, the competition is not
Right.
with each other.
Yeah.
The market is so big. I mean,
Right.
70% don't have bank accounts.
But explain how you solve the creditworthiness problem. How do you know who you can safely make a loan to?
Yeah, so what we did was we really thought about it as what every one of these customers now has is that smartphone. And so how can we actually use the smartphone both to verify identity? So we developed our own digital KYC process.
Know your customer.
Know your customer process, so that we're actually, again, able to piggyback off of that to both verify the identity as well as detect fraud.
Yeah. So what do if I want a loan from you, what information do I have to share from you from my smartphone?
So we're really only asking you about 5 to 8 questions as part of the loan application, and then through the KYC process, it's also, I would say, about a 20-second process where you're taking a selfie, doing a video, and uploading front and back of any kind of national ID. And that whole entire process is automated by us.
Apollo, I'm going to get to you in just a second, but the one thing I want to ask you guys before I do that is, do either of you see your companies as becoming cases of reverse innovation, where you're developing processes that can be brought back to developed markets to improve financier?
I would say yes. We get tons of banks in the US actually coming to us saying, how can we actually use your credit scoring models so that we can actually move downstream to the underserved in the US?
It's also way cheaper, right?
Right.
Faster, cheaper. We should bring Brian Moynihan back and ask him how he's going to compete with you when you move into the United States. Do you see yourself as reverse innovation, moving back to developed markets?
I'm not sure whether we call it reverse innovation, but we basically need to find ways in order to serve our customers better. And these are alternate ways to do so.
Some of those practices can be brought back to developed markets.
Potentially. So what's interesting in Southeast Asia is we've got 2 bookends: Singapore, highly developed, and then the emerging markets like Myanmar and Cambodia. And what we find is that the innovation on both sides of the bookend actually help us to bring more innovation across the whole system.
And actually,
go
thing
ahead.
that I would actually say is more than thinking about it as credit scoring, I would actually think about it as the understanding of the customer and the daily life of this individual. And that's really what I think we can bring from emerging markets into the developed economies, is really saying, at the end of the day, we've actually had to challenge ourselves to think of scalability and really how can we understand our customers without actually being right in front of them.
Well, it's absurd right now in this country if you apply for a mortgage loan, and spend 60 days going through incredible forms when so much information about us all is out there to easily be accessed and evaluated.
Right.
Hey, way over there, Paulo.
You put me here.
You're coming at this from the investor's standpoint, mainly Latin America, right?
Correct.
But where do you see the big opportunities? How do you evaluate the financial opportunities for SoftBank?
Perfect. So first of all, I work in the new $5 billion fund dedicated exclusively to LATAM. For context, SoftBank is actually an investor of Grab. We're very happy with that. I always see the presentations and they have a big logo about you guys, so congrats. But the way we look at it...
He says you're a pushover, right?
Yeah, exactly.
Easy money.
The way we look at it is we want to solve big problems. We don't want to solve small problems, right? So in LATAM, there are 600 million people, of which 300 million probably transact mostly in cash.
Wow.
And you probably don't know much about them. But they do have a livelihood. They do go to work. They do have informal jobs. They do all sorts of different things. And the job creation is happening where? With the gig economy. So people now, they drive Uber or Didi in the morning, then they deliver food for Rappi in the afternoon, and then at night maybe they are a barista at a coffee shop. And they don't have a single job, and if you apply traditional metrics to understanding these people, traditional methods of reaching out to these people, you're not going to do that properly. So what we're trying to find is businesses that can crack the code of especially customer acquisition cost. Because it's one thing to have a credit model. I think eventually everyone has the same credit model, quite honestly. if you do have a data advantage, then that's valuable. But most people have the same data also. So how do you get a data that nobody else gets? That's question number 2. What's differentiated is the distribution channel. So in the case of Grab, for example, Rappi, they have frequency of use. They have people opening their app to do whatever they're doing every day. The customer is right there.
Yeah.
If you do a pop-up button for a loan, for an insurance product, for whatever, the conversion rates are superior than paying Google and Facebook for AdWords and leaving all the money on the table for them, not for you. You don't have a business.
Is there a Grab equivalent in Latin America?
Yeah, we invested $1 billion in Rappi 2 months ago.
Similar model.
Super app.
Super app.
Yeah.
Yeah. It's not exactly, they didn't start in the same place. They started with ride sharing,
yeah.
but they've gone to food and others. I think at the end of the day, all these are going to converge, right? So within Rappi, you have scooters, for example, which is last mile logistics. Does Rappi operate a scooter? No, they don't. But they allow the operator of the scooter to live within Rappi. It's a very interesting concept. And the same thing can be applied for any financial product. Rappi doesn't need to be an expert in insurance.
Yeah.
They can have multiple partners that pay them commissions for originating insurance contracts, and they live within the super app. So that's
yeah. So let's stick with the super app issue for a second, because Grab is on its way to becoming a super app. I don't know if you use that terminology, but that's where you're headed. You talk about this in Latin America. It's clearly happening in a big way in China. Shivani, do you see super apps as the wave of the future?
I mean, I think it's all about kind of translating that customer relationship into additional services and actually being able to, again, holistically serve that customer. If you actually have that relationship with them, you will understand their needs, their wants, and what they potentially should do in other areas as well.
So, yeah, so then all three of you, you can take turns on this, but how do you feel about what Facebook announced this week? I mean, talk about an app that has the potential to be a super app, right? More users than any other. Is this a move towards Facebook becoming its own super app?
I personally don't understand enough to give you a strong opinion. I never understood why they didn't do it before. If you go through Latin America, every single person uses WhatsApp more than 30 times a day.
Yeah.
It's right there. Everything gets done on WhatsApp. Well, everything is much more than the US.
Yeah.
So I never understood why they never monetized that.
Yeah.
I guess they're coming with this global project now. I don't understand enough to be able to give you a
Ruben,
you know.
You must be looking at it.
Yeah, I think what they're doing is really interesting. And first off, kudos to them. Amazing roster of partners joining the Libra program. And what would be interesting for us is to see how they're going to execute on it, whether it's managing the regulators or in-country execution. And for us at Grab, that's essentially the problem we're trying to solve. How do we move money cross borders in the most seamless, the cheapest way possible? And we could do that using crypto, or we could do that using our own closed loop system. And integrating with multiple players to provide the same functionality. So I think it'll be really interesting to see how things develop from there.
What do you think, Shivani?
I mean, I think the promise of it does seem exciting. I think what it would do for a company like ours is actually just accelerate our ability to go horizontally very quickly. Right now, every time we go into a country, we are actually having to develop all our own connections, actually come up with new identity.
Does that mean it's different in every country?
At the moment, for us, it is different. But this
so
would actually enable us to
platforms give you an opportunity to plug in.
Exactly.
What Ruben mentioned, regulatory barriers. In the emerging markets that the three of you operate in, do you have significant regulatory barriers?
In LATAM, for sure. What happens is the oligopoly banks, they spend all their money lobbying. To this day, Brazil does not have positive credit scoring data. It's incredible. They don't have it.
Because the banks have
Because the big
it.
banks have done whatever they could to keep that away from happening. And now it's finally breaking because the data is no longer the traditional data. The data is in the cell phone, as we were describing here. So it's not even, they cannot even block that anymore. So the opportunity, the regulatory aspect is key. The frame of mind that gets me is really Uber breaking the monopolies of the taxis in every city they operated. you're probably going to have to be very aggressive, push the envelope, and people are going to have to love it, and then it's going to become de facto. I think there's a little bit of that going on.
So you look for services that people will quickly gravitate to because you're going to need that to fight the regulators, basically.
Right.
Well, and I also think another way to think about it, though, is to actually, in markets where regulation is nascent, in some ways it is an opportunity to create the baseline, but to self-regulate. So before regulations actually come in, if you actually set the baseline, you then gain consumer, again, reputation, brand, all those things, so that the regulator is actually forced to work with you.
Yeah, Ruben?
Actually, we found the regulators in Southeast Asia rather forward-looking, and we've actually been working very closely with them in order to develop the rules around how do we protect our customers and how do we do things like AML and KYC, know your customer. And I wouldn't say it's onerous. There's just many countries, 10 countries in Southeast Asia, a different set of rules for every country. And so what we've had to do was to work with every single one of those regulators. And to a certain extent, some of them may have very specific requirements, but by and large, they sort of travel pretty well.
Yeah. All three of you are reducing the need for cash, right? What are the effects of that?
Data. You have data, because now you have transactions that are electronic in some form or shape, and now you can track that. And
As opposed to cash, which is not.
So for example, if you're analyzing SME credit risk, you don't need to ask them for financials anymore. In LATAM, most countries now have e-invoices. So every invoice is filed electronically with the government. Those are public data. You can build your P&L with that information.
Based off of that.
Exactly.
Shivani, same?
It is the same. I would say that, again, I think all three of us are talking about the fact that we really want to put the customer at the center of all of these products and these ecosystems. And so, again, we can create new products for sure, but it's really about, if we want to put them at the center, it's giving them control. And so if they actually also have the ability to control their data, see their data, become aware of it, then in that sense, these services actually come to life once the customer has choice and control.
I'm going to open it up in just a minute, but before I do that, I want to ask each of you, what's the biggest challenge? What's the biggest gating factor out there affecting your business right now? Ruben?
For me, it's consumer behavior. And your previous question was about cash. And if it takes a lot for consumers to change their behavior, even in a developed market like Singapore, 70% of transactions are still cash. And if we're able to convert their behavior into cashless, then we get more data, then we can bring them into the financial services world, and that's what we're very focused on.
Paulo, biggest challenge?
I agree with that. My biggest challenge is finding awesome entrepreneurs.
Finding
amazing entrepreneurs that we can back.
Finding the right people.
People that we can back for 20 years, that they are extremely good, ambitious, they think in very innovative ways. So it's all about the people from our perspective.
Yeah. Shivani?
I would say cash and the infrastructure.
You're working in markets that just don't have the infrastructure to...
Good point.
Yeah. Who has questions or comments for this group? Yes, sir. And please stand up. I know you have your computer on your lap. There you go. Stand up and identify yourself.
Sure. My name's Tori. I founded a company called Trust Token. We do tokenized currencies. My question actually, though, is totally unrelated to that. This is more, I guess, just speaking to people that are working in the information age, and a question that's been top of mind for me lately. How do you handle your information diet? There's a million different news sources. You also have your teams talking to you. There's so many inboxes. The reason I ask you guys specifically is because in both Southeast Asia and crypto and a lot of emerging economies, it's like it moves beyond your inbox. It's now in WhatsApp, it's in WeChat, it's in every single channel. So
how do you keep up with it all?
Yeah, how do you, what's your information diet?
I'm sure the first answer to that question is they read the ledger by the...
I'm sure that's the...
But after that?
I'll give you my answer. I think you need to surround yourself with people that really know what they're talking about. Don't talk to too many people, but know the few experts in each area and go to them and develop relationships. Because the guy that doesn't know what they're talking about, they're creating noise on your ear, just eliminate them from your professional life. Just focus on the people that really know what they're talking about. That is a big shortcut.
Fascinating. Shivani, where do you get your information?
I mean, in a wide variety of places, but I would say, I think it's similar. You have to be focused, but I mean, maybe this is old school of me, but I think, there's reading information and taking it in, but I actually still believe that you have to, in a sense, get your own thoughts out there, and so writing is actually fundamental to processing that information.
Yeah, interesting.
I love to talking to people. I love relying on our friendly investors that connect us with the smart people of this world, and that helps to shortcut our learning.
Is there an information sharing process within SoftBank? You're
Of course.
Yeah.
I think SoftBank is very, very focused on extracting synergies from companies, and a lot of that means getting companies to talk to each other.
Yeah. So you get a lot of useful information. You're not just saying
He
that.
has to say that.
No, not at all. I get a ton of useful information from the SoftBank family.
Yeah.
Yeah, really good.
Other questions? Yes, sir, right back there.
Hi, Keith. Thank you. Keith Dreyer from Henry Schein. We're in the B2B world, and are in any of the markets, are you servicing the business and not consumer world as well?
Yeah, I'll go first. So we're very focused on serving the micro entrepreneurs on our platform. And so earlier this year, we actually launched a program called Grow with Grab. And that basically bundles payments, lending, and micro insurance for the entrepreneurs on our platform. Of course, starting with our drivers, because we have full visibility of information, their cash flows. And then we moved on to the food merchants on our platforms. We run the largest food delivery business in Southeast Asia. And subsequently, we're going to just keep nailing more and more verticals.
So yeah, similarly, 70% of our customers are small business owners. But in terms of your question, I don't know if you meant more the traditional banks or other institutions. That's an area that we are excited about, is actually thinking about how can we help institutions also serve the underserved.
Now we look at all types of business models, and the most profitable ones are the ones that are solving the biggest challenges. So there's a lot of challenge with SMEs. As you go bigger companies, they're already well served. So we tend to focus more on SMEs and mid-sized companies as opposed to super large B2B businesses.
Others? Stand up, please, so we can see you. And
Hi, I'm Naveed. I run a company called the Knowledge Society. My question to you guys is, what businesses or companies do you think aren't going to be around in less than 10 years from now?
That's a hard one.
who are you going to eliminate?
A lot of companies aren't going to be around. I think the famous photo of when the car was invented, first year, there's a bunch of horses, 10 years later, all cars.
Yeah.
This is 100 years ago. We all tend to underestimate.
I think he's asking what's the equivalent of the horse?
I know.
Is
I don't
it
wanna,
the bank?
I'm in a public forum. I'm not comfortable.
This is not a public forum. This is a small group of your closest friends. Yeah. What do you think? Who are you disrupting?
Well, we're disrupting cash.
Cash.
Yeah, we're not disrupting companies, we're disrupting cash.
How about banks?
We're not disrupting banks. Actually, banks are one of our biggest partners. So we've actually partnered with 60 financial institutions, banks and fintechs alike across Southeast Asia. Some of our biggest shareholders in each country are actually banks.
Yeah.
That's our approach, an open ecosystem.
I mean, this brings about a good point, just to interject. There are two types of businesses, ones that are attacking a blue ocean and no company is attacking. I think that's what you're referring to. Those are super exciting because as you attack those, the competitors don't even bother looking at you. They think it's unprofitable to serve. And then one day you wake up and you have a company like PagSeguro in Brazil or Clip in Mexico that becomes
They're not disrupting anybody.
super relevant,
Unserved.
right?
Yeah.
And then, because nobody thought it was profitable to serve that small guy. The other type is the one that's fighting with incumbents. That's a tough fight. Some good companies are great at that, but that's a harder proposition.
So do you specifically look for blue ocean competitors?
I prefer blue ocean competitors. That's what I'm saying, yeah. I think it's very aligned with this. So why? Because people are not paying attention. They think that cannot be done.
And Shivani, you're mostly swimming in blue oceans.
Yeah, and I would say the thing that we're really, I think, turning like upside down is trust. I mean, if you think about it, it's like, yes, there's the perception of risk, but again, this customer just fundamentally doesn't trust most large institutions. And so that's really what you're actually trying to put out into the world, is actually how do you create a relationship that you will be able to serve over the long term?
Yeah.
And I don't think anyone's done that for the mass population.
Yeah. So other questions? Jeff.
Jeff Roberts, Fortune. This might be a silly question, but Ruben, you're describing most of your drivers use cash. Is that right?
The consumers were paying our drivers using cash.
That's what I'm saying. I'm wondering, is robbery a big problem there? Because I'm thinking in American taxis, they have the bulletproof glass and stuff like that.
Yeah.
And people don't rob Uber drivers because they don't have a lot of cash. Is that an issue, or is that a pain point for you?
No, that's a great question. Actually, it's one of the reasons why we tell our drivers that it's actually better to accept cashless payments, because it'll be a lot safer for them. And by the way, the same thing for food merchants. So in Malaysia, for example, at a certain time of the day, and everybody knows this time, that the cashiers will take the money and then they take a short walk to the nearest bank to bank in their earnings, and sometimes they get robbed along the way. And a big part of the value proposition is that this is a much, much safer way to deal with transactions. Of course, it's a lot cheaper. Fraud, of course, gets eliminated along the way as well.
Okay, last question. You have to do this really, really quickly. But you were talking about 10 years down the road. Biggest change you think we'll see in finance in your markets 10 years from now, very quickly?
Biggest change is the way people work is going to change. And as a result, the way financial services are designed are going to have to change. You're going to have to adapt to the way people work.
Shivani, you're talking about more piecework, more
Yeah.
the contingent work. Yeah, Shivani.
I think if we believe that the customer is at the center, then money will be used and viewed very differently.
Yeah.
I think all transactions and lending and insurance will all be at a micro level and super flexible.
Fascinating. Great. Thank you, all three of you, for being here. Really.
Thank you.